Hey guys, Happy New Year. I just wanted to reach out to you and talk about some projections that we're seeing for 2022. Can you believe that we're actually saying 2022? COVID was 2 years ago almost. A lot of things have happened over the last couple of years, and it leaves us in question as far as what's ahead. So I just wanted to reach out to you and talk to you about some of the things that we're projecting, and so you can help with your clients understand the road ahead. So over the last year, we've seen actually some inflation rise. And so what happens in response to that is the Fed will increase rates. And that is for the purpose of putting a cap on inflation so that we don't have that out of control. If you go back to history, you see this in 1970, we actually started to get out of control, and the Fed actually ignored it, and it caused some major problems. So the Fed now does approach inflationary news a lot differently, actually. So you've probably heard the news that they're going to increase rates 3 times this year, as that's their expectation. It is not a guarantee that they are going to do it, but that's what they're planning for. This is not actually so that banks can take profit. So increased rates don't go to banks. It is the cost of the money that follows the bond market. So when the Fed is increasing rates, it's basically to control inflation. And so in response to that, it should help get things under control as far as that goes. As they do have success with that, well, 2 things. Going into that, we'll probably see interest rates rise for a few months, but as they get a handle on inflation, we should see interest rates come back down again in response, because investors will like that as they invest in the bonds, and it'll make a much more rate-friendly environment. So that's what we're projecting for that. We are expecting the housing to remain strong. We're planning for roughly about a 10% increase this year. It's not as crazy as what we've seen, in years past, which kind of is a good thing. Still strong, yet not crazy. 10% is still, a pretty good clip, but not 18%. So maybe there's some chance for some first-time homebuyers to at least catch up somehow. One piece of news that came out just in the last week or two, I think it was last week, is that the FHFA is going to recommend to Fannie Mae and Freddie Mac, which they have actually agreed to, they're doing it, to increase the rate pricing on second homes. These are vacation homes. Pretty significantly, and especially if people plan to put 10% down. So this takes place for any loans that Fannie Mae and Freddie Mac purchase April 1st and later, which means that we're going to start seeing this in the interest rate pricing for second homes pretty soon, any day now. I checked the interest rate pricing yesterday. What is today? January 8th, 6th, 7th. Today we're the 7th. They were not updated yet. But we are expecting to see this anytime. So if you do have somebody that's wanting to buy a second home, vacation home, get them in right now. We want to, hopefully get them into contract so we can lock them prior to these price increases happening. So that's one big piece of news. But all in all, one of the questions that I get a lot is, when is the best time to buy? And it's always the same answer. It was years ago. It is now, but with the caveat of when you're financially ready and when you find the property that works for your needs. So if you have any questions on this, please reach out. We're keeping an eye on the market and apprised of the news, and ever changing all the time. So love to discuss, and I hope you have a great day.